Time now for Hot Picks. Montreal-based Gildan Activewear has been in the news of late. Gildan announced a big deal with Hanesbrands. Gildan happens to be a standout stock, according to our next guest, who tracks the consumer sector, David Swartz, a senior equity analyst covering consumer research from Morningstar, joining us now. Great to have you with us, David. And when you're trying to build a powerful punch in your portfolio through retail, what are some of the building blocks of that? First off.
Certainly valuation is at the top. We look to buy undervalued stocks at Morningstar, and so we determine our fair value estimates on stocks, and we look for stocks that are trading at well below those prices, and that's really where we start. Of course, we like to look also at margins and ROICs. Those are important metrics to follow. Those really determine our valuations. We really put a lot of emphasis on companies that have large returns on capital.
Okay, well, against that backdrop, let's talk about a few of your hot picks today. Let's start with Gildan. Obviously, a big deal that they pulled the trigger on. They had gotten through a whole back and forth between the board on who would be leading the company. The founder is back in control. Big deal announced. And what is it that makes this an attractive, undervalued stock, in your opinion?
I think it's attractive because I think Gildan is buying Hanesbrands at a large discount to Hanes valuation. Prior to the acquisition, I thought that Hanes was worth about $16 a share. And so right now, Gildan is buying Hanes mostly with stock at a pretty large discount to my valuation. And so I think a lot of the value in Hanes will be transferred to Gildan after the deal closes. Prior to the deal's announcement, I thought that Gildan was roughly fairly valued, but now I have it as quite undervalued with the combination with Hanes. My fair value estimates are $128 Canadian on the Toronto shares and $93 US on the New York shares. So I think there's actually quite high upside in Gildan. Besides the Hanesbrands acquisition, Gildan has been doing very well over the last few years, despite all the controversy over the management last year. It has improved its margins, and it is greatly improving its position in the printwear market where it dominates, and the Hanes acquisition will help that because Hanes is one of its few competitors in printwear.
Now, that's a great context piece, and we'll watch what happens with Gildan. Another company with Canadian ties is Lululemon, which I'll tell you, for the longest time, it felt like they could do no wrong and seem to be enjoying the same kind of momentum as some of the big technology stocks. But over the last year and a half, there's been plenty of stumbles, and I assume it's those stock market stumbles that have caught your attention.
Yeah, Gildan stock tends to be very volatile. It has big up and down moves, and it's certainly been in a huge downtrend over the last few months. It's kind of a rerun from last year because if you look at the chart in August of last year, the stock was way down, and then it went on a big run in the latter part of the year. I don't know if that will happen again this year, but it does show you that it certainly can happen with Lululemon. The company has been struggling a little bit in terms of its North America growth and with its products. There's been a lot of concern that Lululemon is discounting a lot of products on its website and in its stores, and that it's just not meeting its consumers' expectations like it used to. There's also a lot of concern about competition, and it is certainly rising. But competition isn't really new for Lululemon. It has always faced lower-priced competition, and it always will. But there's still a lot of growth opportunities for the company. Certainly, if you look at Europe and China, where it's still under-penetrated, and that's where Lululemon is really opening most of its stores now. It has already, quite a few stores in all the metro areas in the U.S. and Canada. So really a lot of the growth is going to come from international. There's also growth potential with new products, for example, in footwear, which only constitutes a very small percentage of Lululemon's sales. So that there certainly are areas of potential growth, and Lululemon has a history of beating estimates. So the company reports next week, and we'll see what comes out. But I wouldn't be surprised if it turns out to be more positive than people expect, because right now it seems like investors really have a negative view of it.
Okay, that's an interesting preview. Company set to report August 29th. Finally, Nike. Nike, a lot of people have talked about the stumbles. John Donahoe, guy I used to interview a lot when he was in Silicon Valley, who then took the helm, and there was this big push towards a direct-to-consumer focus, which seemed to backfire on the business. They brought in a former company lifer to run the business. And what is your sense of where Nike is headed at this point?
Yeah, Nike's had a very tough period, really, for the last year and a half or so. And there was a CEO change, as you mentioned. John Donahoe had a lot of problems, and unfortunately, it didn't work out very well for him. But the company brought in Elliott Hill to be the CEO. He's a longtime former executive, and really he's focused on two major things. Number one is getting better products out and dealing with all the competition. And number two is repairing relationships with retailers. And I think that both of those things are happening. It's probably still in the early stages, but there are signs that some of Nike's new products are starting to really catch on. For example, in running shoes, we have seen, it appears, more distribution to Foot Locker, which is a longtime Nike partner, but it's one that Nike had pulled back from. But it seems like Foot Locker is now promoting Nike shoes more than it has in the last few years. And I think it will also benefit from the merger between Foot Locker and Dick's Sporting Goods, which is currently going on. Nike has good relations with both companies, and I think that the merger will actually help Nike in North America and potentially internationally too. Nike does face a lot of competition like Lululemon does, but again, I think the valuation is attractive. My fair value estimate on Nike is $104, so that's pretty good upside. And historically, buying Nike when it's been down has been a good move. Same with Lululemon. If you buy it when it's down, often you get good returns. So, I think there are opportunities right now for those sportswear companies that are really out of favor with investors.
Great insight, David. Thanks a lot for shedding some light on all three of those stories: Nike, Lululemon, and Gildan Activewear. A lot to consider there. Appreciate you joining us on the Hot Picks section today. David Swartz of Morningstar.